Today is February 24th, and this is a trade pick for the week. This trade pick is Cisco Systems. They are in the technology sector, specifically in communications and networking, and they're traded on the NASDAQ stock exchange. Their profile, if you're not familiar with them, they're engaged in designing and selling a range of technologies that power the internet. The beta is at 0.95, so pretty much it's trading right around the same volatility as the S&P 500, not too much, not too little. And the average daily volume is a whopping 20 million shares traded daily. So that's outstanding liquidity. Let's take a look at the chart. All right, so we're going to focus first in on our scoring system here. So this is really just a way of how we score these things. We have a fundamental quality score of 93%. That is outstanding, really, really high. That looks really good. Fundamental value score, only 53%, not quite as good. But I'm not really trading this because it's a value stock. That's really kind of not my thing. And the technical analysis score is a pretty respectable 82%. Now, let's take a look at where to take action on this. So I've highlighted the green area. That's really the support or demand or where we can take action on a bullish position. So that's our buy zone. And that is from $48 on the high side down to $46.27. So anywhere in that area is where we can look to take a long or bullish position. So take a bullish position if price drops into that buy zone, and it's very close to it right now. Stop loss would be right about 45.96, give or take. You could, move that up or push that down lower based on your own risk preferences there. But that's a pretty ideal location, not a bad spot for it. Some of the pros of this trade candidate would be Cisco's a strong company with strong, good quality, solid fundamentals and good technicals as well. So you're really getting both of it. You're getting the technicals and the fundamentals, which is always an added bonus. Cisco recently broke up and out of a sideways range, which is bullish. So that's always very encouraging. Once it breaks out, we want to buy that first pullback after a breakout. And that's exactly what's happening right here. Now, some of the cons here, though, it's not a perfect trade setup, but it's good. It's just not great. So the cons are the NASDAQ itself may suck down Cisco lower as the NASDAQ is currently weak overall. So we want to just be aware of that and say, you know what, that NASDAQ could really drag down Cisco, even though Cisco's been fairly strong recently right now. The NASDAQ in general, the QQQ, has the ability to do that. So the analysis here, an option trade would definitely be preferred instead of just buying the outright shares of Cisco. If you're going to buy the outright shares, though, I would highly recommend using a reversal pattern somewhere inside that buy zone and time it out when the QQQ hits its support, or at least when QQQ gets close to its support. That should give you a much better chance on the trade and a less chance of getting stopped out on the trade. But again, overall, options would be a better way to go. Speaking of options, here is a chart using the Thinkorswim platform where I've added in the implied volatility ranks on here. So we can see the implied volatility rank and implied volatility percentile are both low. So that means we want to use debit spreads on this or something similar to it, other expansion type of option tactics. Unfortunately, we really wouldn't get a whole lot from a credit spread right here, even those are definitely wonderful ways to go. It's just not a credit spread type of thing because that IV is really quite low right now. We want to focus more on an implied volatility expansion type of tactic here, like a debit spread, in this case, a bullish debit spread, because we're looking to take a bullish trade on this. Let's look at the weekly chart here. On the weekly chart, we can see going back to May of 2022 to really right around early 2023, there was some strong resistance up there around the $47, $48, $49 range, and it just couldn't quite break through until recently. So it just had its breakout where you see breakout and bullish labeled there in yellow, and we're now getting that pullback right back down into that $48 level. So that's that newly formed support area, and that's really the area or location that we're looking to take a bullish trade on this. And again, this is the weekly chart, so much bigger perspective. Now that brings up actually another issue here. You could trade this with using two different styles. You could do a swing trade, which could be anywhere from a few days to a few weeks, or you could take this as a position trade, which could be several months. Your choice on this, or even a combination of both too, really. So that's one of the reasons why I like this setup is you really have some flexibility and how you want to go about trading this. All right, and then you can see here the relative strength, which is certainly an important indication of the momentum and the power and strength behind any company. And this is actually rating fairly well right now. The 1 month, the 3 month, the 6 month, all are looking fairly good. The 1 year actually only down 3%. That's pretty encouraging. Actually, it's not too bad. On the volume chain, now this is encouraging and important actually. On that breakout, we can see the past 10 days over the 3 months has had an increase of just shy of 24% in the change in volume. That's good. That's encouraging for the bulls. Okay, and we can see on the 52-week high, price is only down or below the 52-week high by 13%, which is actually fairly bullish right there. It's not too bad. From more on a fundamental perspective, the revenue has been increasing and is expected to increase in the future, which is the light blue line. The net income, same thing here. It's expected to increase the next several quarters, and the normalized earnings per share. So really revenue, income, EPS, everything's tracking pretty well right here. That's definitely the upward trajectory that we want to see from a fundamental type of perspective, from an earnings and sales type of perspective. And then we can see, again, fundamentally speaking, return on capital, 20%, return on equity, operating margin, all pretty solid numbers, especially when you compare it to its competitors in the industry. Cisco actually does significantly better compared to its competitors. All right, ladies and gentlemen, stay tuned for more trade picks of the week coming up later on. And that's it for now. God bless and good trading, everyone.